Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. Now, social media is reshaping financial education, with 51% of Singaporean adults relying on it for investment and financial advice. And this includes topics like investing, saving, and budgeting. Those are the most discussed topics across the region. And social media platforms have also become a breeding ground for misinformation, financial scams, and pump and dump schemes. So it cuts both ways. So definitely a lot to unpack here. And to help us out, we've got Malcolm Khoo. He is the CEO for CGS International Singapore. Malcolm, good morning. How are you doing today?
Yeah, good morning. Thank you, Ryan, for having me on Money FM.
Great to have you on. And we want to dive into what's playing out in the digital space. It's really something that we can't ignore. Everyone turns to it for various reasons. So there's a growing role for it when it comes to investing and making financial choices. Walk us through how significant it is right now.
Yeah, so according to some surveys, like the Money Smart survey, it highlights that more than 50% of Singaporeans now turn to social media for financial advice. The deeper question is, what sort of financial advice on the social media are Singaporeans in general looking for? Across all age groups, the top three popular areas of interest are firstly, advice on investing, secondly, topics relating to savings, and lastly, topics relating to budgeting. Interesting to note that the Gen Zs, those ages between 13 and 28, were most interested to know more about savings, while those above 28 years old are more interested to find out how to grow their wealth. For good and sound financial advice, always check if the financial influencer, also known as the finfluencer, or the digital platform is licensed and regulated under the MAS Financial Advisors Act, as this gives the consumer an additional safeguard to fend off misleading advice or, in some cases, financial scams. In addition, always bear in mind that if it sounds too good to be true, do ask more questions. And the rule of thumb is always, the higher the return, the higher the risk. You should ask more questions before making a decision.
Yeah, that's a good overview of what's playing out right now in the social media space. There's so much noise that we have to grapple with and navigate through. How has it changed over the years, Malcolm? Because I remember back in the day, we didn't have influencers. So where do you get our information from?
When I first had my own trading account, it was way before the time when there was Facebook, Instagram, or TikTok. Even when I started working in the finance industry, we relied heavily on research reports, annual reports, live news feeds from channels like news channels, radios, Reuters, Bloomberg, and company visits. It was a mixture of hard copy literature on related finance topics, as well as soft copies with basic graphics, as the files have to be small enough to be downloadable. If you recall, mobile phones then were at best 2G, did not have emails or internet capabilities then. Now I think things are very, very different. Now with better internet speed, better connectivity, and better processing power, the world has too much information, from poor quality to high quality information, and at times the wrong information. Good or bad content, it gets to your mobile phone faster than you can consume. This exposes more investors to scams and potentially unregulated and bad investment advice at a more alarming rate as compared to before. Again, if it sounds too good to be true, check with a trained and qualified financial advisor. If it promises high returns, it always comes with higher risk. And again, ask more questions before making investments. You might be curious about how financial professionals cope with tech advancements then. Surely they're not relying on social media to make an investment decision. Using the tools of cloud computing, AI to analyze movements in live prices across multiple markets and stocks, low latency trading algorithms, and many more tools that enable them to analyze balance sheets, profit and loss statements in real time. And the list goes on. AI tools today can summarize a 600-page research report into 20 key points, if one is really in a hurry to get a broad sense of what the report says when it's published. I think one great source of information for financial professionals is still the good old-fashioned company visits to understand the company better before making an investment decision. There's no shortcut, and sometimes it's best to hear from the management of these listed companies. Many of them have invested their professional career, the bulk of the professional career, in the company, as well as putting the bulk of their wealth in the company. I think recently CGS International partnered with SG Visco and SGX to feature many of our own company visits to various listed companies in Singapore in our Behind the Boardroom video series which you can watch for free. So those are a good resource that investors, young investors, can reach out to. And this will give investors a better sense of what and who they are investing in.
Yeah, Malcolm, so you paint a picture of how things have changed. I wonder as well, have investor attitudes changed? Because it's quite important to promote sustainable investment practices. Are the younger investors nowadays less careful, less cautious in that sense when it comes to making their investment choices and decisions?
So first, we have to understand, what sustainable investment is, because it's, to many people, it's something new to them. I think sustainable investing refers to a range of strategies in which investors not only include financial, but as well as environmental, social, and corporate governance, ESG, in short, criteria in their investment decisions. Young investors need to know the importance of sustainable investment because of three broad factors. Firstly, there's a growing awareness of global issues like climate change and social inequality. Young investors are aware of these issues, and they will want to align their values to similar values of companies they would like to support as shareholders. Secondly, there's also a shift in consumer preferences. Brands that promote sustainability, diversity, ethical practices tend to attract more customers, which in turn translates to long-term profitability. Investors recognize that companies with strong ESG practices are better positioned to thrive in the future. I think lastly, many studies have also shown that sustainable investments can yield competitive and at times superior financial returns. Companies with strong ESG practices are often more resilient, better at managing risks, and are more innovative, which can translate to long-term value for investors. CGS International do hope that our ASEAN Investment Challenge is a catalyst for positive change that will empower students and our clients to become good contributors to sustainable investment practices. The registration for our students will start in April this year, and so do look out for the details.
Well, Malcolm, you are working with the youth and you point out the ASEAN Investment Challenge. So to wrap things up, working with the youth, this AIC or Investment Challenge across Malaysia, Thailand, Indonesia and Singapore in partnership with the 4 exchanges there. What have you taken away when it comes to your observations with regards to their level of financial knowledge and some of the attitudes they have right now towards investing?
I think the interesting thing when we started the Investment Challenge in 2022 in Singapore, it has grown in terms of numbers. So this last year in 2024, we have empowered more than 5,000 students in ASEAN and more than 1,000 students in Singapore. And this cuts across, as you rightfully pointed out, it cuts across Malaysia, Indonesia, Thailand, and Singapore. And it's the only investment challenge in ASEAN that's supported by all the 4 local exchanges, namely Singapore Exchange, Bursa Malaysia, Stock Exchange of Thailand, and Indonesia Stock Exchange. So all the students will be trained with lifelong skill sets in financial management, risk management, portfolio management, technical and fundamental analysis, as well as fundamentals of ESG investing. So again, to close the gap between misinformation and reliable financial knowledge, the students have the opportunity to hear from the experts from all the 4 local exchanges, as well as qualified and certified financial analysts from CGS International, who has won numerous top-ranking awards from the Institutional Investor publication, as well as being the best local broker for Singapore. By providing the knowledge and the tools, the students will have to invest and manage an investment portfolio and present their portfolios at the end of the challenge to judges consisting of representatives from the various stock exchanges. This enables the student to make more informed investment decisions rather than jumping on trends or blindly following unqualified recommendations that they see on social media. So I hope that this year, in 2025, we could empower, more than 10,000 students from across ASEAN. And I think that will basically set a very, very good platform, in bridging the gap, between misinformation and, good quality information that's in the marketplace.
All right, we've been in conversation with Malcolm Khoo. He's the CEO for CGS International Singapore, talking about how the youth are navigating the social media noise in their investing decisions right now. Malcolm, thanks so much for your time this morning.
Thank you very much, Ryan.
All right, stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.